Friday, February 10th, market analysis. Stan Ehrlich, good morning. I start out with the stock market indexes, the S&P 500 typically, the SPY specifically. If you've been following me at all in the last couple of months, you know that I'm expecting and have forecasted, and we are now in a new long-term bull market. There was a head and shoulder bottom, which started in June for the first shoulder low. October 13th, an extremely profound bullish engulfing ER new buy signal on the exact day that the market is so far completely bottomed out. That was the head of the formation. Not particularly surprised. I'm super glad that it was right on time and so blatantly obvious to those of us who know some technical analysis, etc. The last shoulder low was on December 22nd, sorry. And that was approximately a month earlier than I expected, but approximately the right price, maybe a little bit higher. But the body part's still there. A low developed. We had a few weeks of sideways range that broke out to the upside. Looking fine. There's no reason to believe that there's anything wrong with this pattern. We went up to the neckline. We broke through it. We came down to test it. We made new highs afterwards. Now, that's only several days ago. It got overbought. So we should have, and we are getting, a downside correction. Should have expected, and we're getting a downside correction. As to how far down it goes, and yesterday was the lowest low since the highest high. Again, that was on February 2nd. This is only 8 days later. We have a little bit lower low today, below yesterday's low. And I have to mention that yesterday was an ER new short sale signal. An outright sell it, it's going to go down. Well, I can't say that just a little bit of a new low below yesterday's low is going down. In fact, we are currently up on the day a quarter of a point, which is hardly anything. But the point is the bigger picture here. A small downside move we may still have in front of us. When I say small, the neckline for, say, tomorrow is going to be a little bit under 400. And we're at 407 right now, 407.30. So it's no big deal, but you can't go, you shouldn't go, we don't want to go below that green neckline I just highlighted with the little white dots. And again, that's just a little bit below 400. Call it 39.50 to 400. No point in being super accurate here. You don't want it to close below that line. You don't want it to even go below the line to begin with, although sometimes it does, and it comes back right away. On the first day, it does get below and close below, and I don't think it's going to do that. Now you got to make a decision. Is this pattern going to fail? Is the whole thing going to fall apart? It probably is not going to go sideways. You're probably going to have a bull market still, or a bear market starting again. The continuation, I should say, of the old 2022 bear market. Right now, bull market intact, no problems, looking for a place to scream bloody murder, buy it. I'm hoping to get a ER green bullish engulfing buy signal. It may take a few days. We're not anywhere near oversold. I've got to have that as one of my criteria. The RSI at the bottom is a custom relative strength index that Wells Wilder taught to me himself as far as the basic tools are concerned for RSI, his version. And it doesn't look like an RSI, but it is. So it's got a variety of other features, and it's available. Now, from where we are right now, down to about 400, call it a few days from now, 399 to 400, we should turn around and start to head north. My job is to tell you that has started and be right, I hope. So that's what I'm looking for, and I don't see anything great about the way the market's acting at the moment. I don't think that because we made a lower low by a minor amount and we're a little bit higher in the day by 1600s at the moment, that that's going to make any damn difference. The real point close by, near term, is yesterday's reversal. And before that, the overbought condition. Plus, it was banging up against a real big resistance area. That big red zone up there is the next major problem price range, which is quite large, but it goes back way over a year and has a variety of reasons to believe that that price range could cause trouble on the way up. It already has. When we got overbought, we bumped against the bottom of it, and now we're back down here. Enough said about the S&P. You know I'm bullish. I'm bullish all the way up to historic highs and then probably more. That is the minimum upside objective on this head and shoulder bottom formation. Again, there's hardly anything wrong with it whatsoever. You never find them that are perfect to begin with. Okay. DIA. All similar commentary. Just a moment, please. The DIA, all similar commentary, except the DIA has been forming a pennant formation here for the last, well, since early November. Excuse me. And as a result, it's at the moment basically at the middle of the pennant formation and has quite a bit higher to go or lower to go in order to break out of the pennant, let alone break the upward slanted blue neckline across this head and shoulder bottom in the DIA. It'll do it sooner or later. Take a little more time. And the spider and the Qs will be leading the way, in particular the Qs I'll talk about in a moment. The head of this formation happens to be a minor double bottom. It had its October 13th reversal, but unfortunately didn't quite get oversold within the allotted amount of past days. Therefore, it didn't turn green, so I make it look like a candy bar or a candy cane, white, green, white, green, white, green, to bring my attention to it wasn't solid green. It wasn't a real signal. But the double bottom had a breakout that had a minimum upside objective to here, and that was working just fine. So the shoulder, the head, the last shoulder low into a pennant formation, fully expecting a bullish breakout to the upside. That'll be start to close above 345, 340 to 45. That'll be an upside breakout, and we don't have far to go to do that. Actually, I'm going to say 42 to 45. Okay, last for the indexes, the QQQ has been the strongest, doing the best, moving up the quickest, making new highs for longer periods of time the quickest for the last a couple of months. The last shoulder low was dangerously close to making a double bottom and killing the head and shoulder bottom formation. But in my opinion, it's high enough to be a shoulder. And up we went, crossing the neckline, crossing the long-term bear trend line, crossing a whole variety of resistance levels, and made new highs since all the way back into this huge down day on August 26th. So we have these resistance levels, different color lines at different price levels to overcome on the way up. Today's low is on a support line for the QQQ. So that's nice and not particularly convincing yet. It's still lower on the day at the moment by $2 almost exactly. So what do we have? We have the Qs dipping down a little bit and staying there momentarily. And here's the 1 minute chart on the Qs. So they just basically continue to work their way down. The 1 minute chart on the DIA looks quite a bit better because you've got, starting at the end of yesterday, a little bit of a bottom starting to develop, more so early this morning, and then we have higher highs and higher lows since then. But again, it's currently 11:38 in California, so we have an hour and a half, less a hair, until the market closes, and a lot can happen. A lot has happened in a heck of a lot less than an hour and a half. So we'll see what happens. Now, futures. We've got the gold cocoa market, excuse me. First one I'm going to talk about has a head and shoulder top building, but doggone it, this darn thing can't get started and needs to make a new low and a new low close for the last 2 or 3 weeks immediately. It's going sideways too long. It's ruining the last shoulder typical shape, timing, variety of things. I wouldn't call it totally ruined, but yeah, you got some problems here. Again, I need a new low and a new low close below all of these little lows here, ASAP, and that's below 2570, 68, something like that. Next chart, in order for that head and shoulder top to work. In one single day, the silver market tested resistance, previous highs, stopped rallying, created a little triple top, dropped back almost to unchanged, which is lower than the middle of a sideways range for almost 2 months. And the next day, slam dunk, new low closed for 2 months. In 2 days, it got from being overbought or almost overbought to definitely oversold. That's a very big move in a 2-day period. We continue to work our way lower, but it is now oversold for about a week and slowing down the decline rate. So I'm thinking there's going to be a rally any moment, and it's going to be probably back up to about 23.16. But it's turned down, and I don't think this low we're going to have, and we're gonna, is going to be a low and then a new high for the whole trend. There's a chance of that. But at first, let's have this darn rally up to 23.20 and see what happens. Next, E-mini. Of course, it's the S&P 500 index, but it's also a futures contract. That's why it's in the futures contract group. And of course, we got October 13th, the bottom of the bear market to the day, the bear market of 2022. We also, I think, got the top. No, not quite on this one. Too bad. Some of the indexes, we also had a sell signal on the high day. That's over a year ago, so I'm not really talking about it very often. This dropped below the neckline a little bit yesterday and closed above the neckline. Today, it dropped a little bit more below the neckline, but is at the moment around unchanged, down a few ticks, but above the neckline. Now, ladies and gentlemen, the high on the S&P 500 spider was almost exactly the same high relative to day number 12, December 13th, as we had a high on the December 1st date, and that's the spider double topped out at the same prices. So let's play a game. If you bring the neckline down a little bit on the E-mini to about the same price level as the high made on December 1st, which is not the high of the day on December 13th, but I'm playing a game here. Your neckline obviously slants downward a little bit more, and now it looks exactly like the spider activity, breakout for a day or two, dropped below one day, came back, made new highs, got overbought, slipped a little bit, tried to make a new high, and here we are, slightly lower than yesterday's low and around unchanged. So now, and not under the neckline, and not even super close, but close. But that's okay. By the way, when you have a breakout of head and shoulder bottom formation, the typical situation is you have a very, very strong, quick breakout. Typically, we'll get overbought. It usually lasts a couple of days, maybe even a lot more. Now, once it decides to top out for the moment, you're going to have some sort of downside correction, which is typically, and here's the important part, about halfway down to the neckline, or maybe all the way to the neckline. So we are in that zone. We made it halfway down 4 days ago from the highest high to where the neckline is, where the low of the day 4 days ago was about halfway down. Then it jumped up, but there was no new high. Now it simply has made a little bit of a new low, but not below the golden rule, the neckline. You don't want to close below that. That's a pretty strong, hard, fast rule in this technical analysis business when you're dealing with head and shoulder tops and bottoms. The neckline is very important. More so than other formations, frankly, but maybe equally. Next chart is, come on, don't play games with me. I'm sorry, there's a little delay here. Let's see if I can correct that problem. I don't know if I can. I'm going to be stymied here for a moment, I think. TradeStation is acting up a little bit. We can see that we're barely higher in the S&P, up 7 ticks, and it's locked up at the moment. But that was 30 seconds ago. The DIA is just only up 1.6. I'm sorry, 1.16. And the QQQs are down 2.5 points. That was of a minute ago or less. And I am reloading apparently a lot of charts in the background. So I must have lost a data feed for a moment. Let's see if I can get to the next chart now. Yes, good. Thank you for being patient. Corn, sideways trading range at the moment, but you've got a really good bear trend line, which could be the equivalent of a neckline that we need to close above. And once we do close above that blue little bear trend line, all the way from the highs in April's, which has 2 points to start the line, of course, 3, 4, 5, 6. I don't know if you want to call today a touch of the line or not, but not quite. 6 points, 4 additional ones after the line was created. That's pretty good proof that it's significant. So I'm expecting it to close above this line and start to head north, crossing over 703-ish, significant resistance, and probably testing the high of 740. So I'm obviously friendly, and I'm waiting for a bullish breakout above the neck trend line, that is, in order to tend to confirm. So next chart, OJ. I mentioned again and again that this market is dangerous. In particular, yesterday, I said tomorrow's Friday, the end of the week. We're extremely overbought. I have not seen another daily data chart that has an overbought level of 97, 98. What was that exact number? That exact number was 98.30 on my custom RSI yesterday at the high of the day. And look how much of a crash we have today. We're way below yesterday's low, below the middle of the day before that, and almost every day has been up almost since it experienced a cold spell. I'm pretty sure that's the reason for this rally. I don't know, and I don't care, but it's pretty obvious. So I'm going to drink a little less orange juice in the near future. Next chart, and it needs a correction. It needs a big correction on OJ. Back to support. Soybeans. I got a good sell signal, worked for about a week, tested resistance, didn't break through, didn't go down enough. Now it's trying to get through this resistance level. Ever since October, it has been in a higher high, higher low, stair-stepping uptrend. That's quite a few months. But if you look back further, you've got your huge highest high in June of last year, and only in July, and the next month, a low. Ever since then, this has been going sideways. You don't have a higher high or a higher low. You've had some very good swings here and there. I think we're getting closer and closer to breaking out to the upside for another major bull move, but we need the breakout. I wait. In the meantime, this line across these two lows are important. It looks like a head and shoulder, but it's starting to kill that formation because of the strength yesterday and today. So I'm a little less likely. I will probably eliminate this little blue line across the bottoms very soon if it doesn't start going down toward that line right away. Next chart. Gold. Hey, yesterday we got another bearish engulfing, the third one in a month. The middle one on February 2nd has been the top of the market. We crashed for a day or two and went sideways to a little bit higher, eliminating the oversold condition. And then yesterday had another outside down day with barely the proper overbought condition within an appropriate number of days, which is very unusual. Normally, I wouldn't trust this bearish engulfing because the RSI is already down in the 30s and high 20s. So the RSI is down at the moment so low that I should be looking for buy signals. That's the overriding comment I have to make. Now, the signal yesterday has come true. We did get an ER3 fill. It has gone down below yesterday's low. It is currently trading below. We're short for ER3. ER1 got short even a little bit higher yesterday during the trading day and would be a little bit more profitable. So the signals are working. I'm just very leery about getting a sell signal. I can't remember the last time this kind of thing happened. And it only happened because it was overbought and then dropped so fast, so quick, and got so close to oversold that this code is paying attention to what 99% of the time happens. And this is that 1% that rarely happens. So I'm not trusting this sell signal, which is still working. Don't get me wrong. I'm just overriding it sort of mentally. Next, I'm not buying it, that's for sure. And the system is short, whether you are or not. Let's see what happens with this trade. Now, heating oil. We got the top of the rally. We got an auxiliary new short sale signal a couple of days later. That's fine. But you notice, unlike gold we just looked at, this wasn't down all that much from its peak and didn't get way, way, way oversold in the few days since the first signal. So that was okay. That's kind of normal. Now we got oversold a few days ago, bounced back up a couple of days, and now kind of sideways, down yesterday, up a little bit today. No higher high, no lower low today. It's an inside trading range today. So looking for new lows, looking for potentially a big, big move down in heating oil. You have to remember, looking at the bigger, longer term picture, wow, this thing has been building a top maybe since April of 22. That's huge. Big, big, big. Damn near a year. We start closing below 2.2, and you have started a bear move that's going to go down a lot. Next chart. We sold a rally high recently. Great short sale, dropped for about a week, got oversold, bounced, still bouncing, maybe a touch more than I expected, but we're right smack at a resistance spot. So I'm going to stick my neck out, and I'm telling you today's high is probably the highest high, and we're going to start to see new lows immediately next week, if not, well, yeah, probably next week, Monday, without being higher than today's high. I think that's what's about to happen. Otherwise, I would be waiting for new short sell signals and confirming that the sell signal is going to be more powerful than it already was. Next chart, wheat. Boring. Sideways trading range, slow moving long-term bear trend, looking for lower levels. But I think I'm going to stop here because I reached the ones that I don't really want to make too many comments about. I don't have a lot to say about these other futures charts at the moment. And there's cotton. Somebody asked me to add cotton recently, so I added it. That was the chart before that. Nothing going on right now. And that's it for today. Thank you very much. Have a great weekend. Profitable trading to you. Stan Ehrlich. Bye-bye.